Yo, you're listening to the Money Monopolizers Podcast, helping you take control of your financial destiny. It's about time that we invest more in our financial literacy and work towards building generational wealth. If you think you're ready to do the same, then you've come to the right place. Alex, Marlon, y'all ready? Let's get this bread.
What's good, everybody? It's Alex Camuyo here, and we're back with episode 3 of the Money Monopolizers Podcast. I'm here with my co-host, Marlon Walls. Marlon, how you doing today, bro?
Man, I'm doing real good, bro. School is finally out. I'm just in summer now doing research only. Just got my haircut yesterday.
Okay.
My first tenant just moved out yesterday as well. Now, he still has 2 months left on his lease, so he still owe me 2 months of rent. So we're going to see how that goes.
Yeah,
we ain't got to go through anything, but he's just going down to finish up his degree and stuff. So, so he moved out, but everything been looking pretty good over here. First landlord experience was pretty well. I ain't have any trouble from any of my tenants so far. Mm-hmm. 2 of them are still here. They plan on moving out end of June and end of July. And I think everybody will actually move. So I had to go through the whole process all over again. But it's been really good, man. How you been? How's that flip going too, by the way?
Oh yeah, bro. Well, first, I mean, like last time, we had some real good feedback on the second episode again, so I'm real happy about that.
Definitely.
I've been putting a lot of work in for this stuff, so it's good to see it paying some dividends. But yeah, as far as me personally, I mean, I was off today at work. I had to go to work today, so just kind of chilling today, taking care of some stuff. I had to go next door to replace some of the filter for my tenants and stuff, and I was asking them if they were going to renew the lease, and she was saying that I really don't know, honestly. The space is kind of small for us. I was like,
how many is it?
How many is it? What?
How many tenants are living there?
It's just them. It's like the lady, her husband, and then they got like a family friend living with them.
But so it's like 3 bedrooms though?
Yeah, it's a 3-bedroom. So
yes, they want to.
But she was talking about like the kitchen didn't have enough space for their stuff. I was like, all right, that's cool. But yeah, because I wanted her to give me 60 days notice, but I didn't put it in the lease, so I can't technically hold her to that. So I was like, can you at least give me like 45 days notice so I could start advertising, marketing it for the next tenant, but because their lease ends June 30th. So I want July 1st, I need somebody to be in there.
Right, I agree.
Yeah, but I mean, as far as the flip is going, that's going real good. I was just over there today, check out the house. I know last time we talked about it, we said we had 3 offers in that first weekend, and we ended up getting 8-9 offers in the first week. Yeah, 3 of them were $10K above asking. We ended up taking one, and yeah, we should be closing here early June, and we're gonna be making a nice little summer change on that one.
That's real nice.
Yeah.
One thing that just reminded me of, you said 10K above asking. Remember last week on the podcast we talked about losing 5K, but you see how fast it comes right back. We about to make double what we lost over the asking price. So just look at it like that. I just think about little things like that. Mm-hmm. So a little setback, but you got a major comeback, and you're gonna have way more after that. So never be discouraged by failure, because you see what happens when you just keep on pushing.
We got a good episode for y'all today. I know last week we was talking about kind of mindset and why leaving money in the bank is a bad idea. And just to recap that a little bit, you go check that episode out if you haven't already seen it. But yeah, just to recap that one, we were pretty much just saying, it's not a good idea to leave money in the bank for a long period of time. Losing money on your money, you are losing buying power on your money due to inflation. It's even if you don't want to be financially free, if you don't want to retire early. I was actually talking to somebody about this today, and it just reminded me of, man, even if you don't want to do what we're doing, if you don't want to be retired or financially free, you should still be investing your money. No matter what. I think everyone should be investing their money. You're losing too much money not to invest. And the thing about it is, if you're investing it, even if you don't want to be financially free, fine, but you got to look at the lifestyle that investing can possibly offer you. You're going to be well off no matter what. Like, you're going to have income coming in no matter what happens. And even if you want to work, then who wouldn't want to have that extra income coming in? It's it's bread and butter, bro.
Right.
It's something everyone should be doing.
Just because you are raised as like with a poor or middle class family doesn't mean you have to have a poor / middle class mentality. Now you're talking about everybody should invest. I agree with you but the problem is that they're never trained on knowing how to invest, so they never start investing. But once you once you figure it out and get that mentality of, hey, investing is how the wealthy make their money, why not you? It's like how Russell Westbrook always says, why not? And it's like, why not me? So if somebody else can do it, I feel like I can too. And just I need the knowledge base to do it, and then you can go ahead and do it. I would say it's like knowing the numbers to hit on know the numbers for the Mega Millions, and then just being like, I think I just put some other random numbers and then still lose. Like you have the path to success. You have the formula to success, but you're choosing not to take it. So now it's like what are you doing at that point?
Mm-hmm. And success looks different for everyone. If it's retiring early, and that's the thing. Actually, I don't even want to. We're gonna stop calling it retiring. We're gonna start calling it being financially free. Because the thing about saying retirement is
it's like a stigma to that.
Yeah, that, and it's like insinuating that when I say I retire, that I want to be retired at 28, that I just don't want to work anymore. I just want to. I just want to relax for the rest of my life. That's not what I'm saying when I say retirement. Well, by saying retirement, and now we're going to start referring to that as financial freedom, it's me saying that I want to have the option to work. The key word is option. I'm choosing to work if I want to. When I'm 28, I'm probably very well going to be working. It's just because I'm going to be working because I want to be working, because I want the extra income in addition to my passive income that I'm earning.
Exactly.
It's not because it's not because I'm being forced to work. I'm going to be working because I would choose to work. It doesn't mean that I won't. It's just that's just kind of how I want to start referring to that. And even like when we're talking here, we should correct each other in that sense, right? By saying financial freedom, just so that we can kind of push that stigma about it.
Yeah, I definitely agree with that. Because I think people, like I said, stigma earlier, people, when they think retire, they think, I'm about to just go ahead and chill. It's like, I'm about to sit on my couch all day, especially at 28. They're like, man, what you gonna do with all your time? It's not saying that I'm not just gonna sit there on my couch and eat chips all day because, hey, I'm retired now, just about to lay up and do nothing all day, every day. It's saying that I just have a choice to decide what I want to do with my time. I can actually like go to work if I choose to, or alternatively, I could go find something else better to do that you may not have ever been afforded the opportunity to do because you're financially free. You don't have to worry about going to work in order to pay your expenses. And it's like, now for some people, they love what they do, and that's fine. It's just about thinking differently, thinking differently and just understanding that if I put my money into investments and allow it to generate passive income for me, I'll be able to live the life I want to and choose to work, and not necessarily just being quote unquote retired. Just I'm able to make decisions in my life that I otherwise wouldn't be able to make.
But yeah, I think we should definitely get into the episode now, what it is and what we're talking about today. Today, what we're talking about is bread and butter investing. We are going to be talking about what everyone wants to know about
investing 101.
Yes, sir. You can consider this investing 101.
Professor Walls, Professor Camuño. Here we go.
Yes, sir. So what is investing? Oh, shoot. What is investing? So, I mean, everyone hears the term investing, and everyone thinks of it. I would think a lot of people think it's like synonymous with savings and that kind of stuff, but you got to really think about it in terms of a return. So whenever you say the word investing, the key thing in that whole thing is getting a return on whatever effort you are putting out in the beginning. So investing can refer to investing in yourself. If I go to the gym, I'm investing in my health, right? If I go to work out, or if I go to lift weights, I am putting in effort in order to get a return on the back end, which is going to be on my body and the health I'm getting on that, right? So in terms of what we're talking about here, which is money, though, that's what everybody wants to know about. Investing is the allocation of capital with the expectation of a future financial return. So that's what the quote unquote, I guess, dictionary definition is. Right. So you expect a return in at some point in the future. So why should you be investing? Let's kind of talk about why you should be investing and why. I mean, it's kind of going to tie back into what we were talking about last week. Primarily, is going to be the main reason you should be investing. But also, I mean, everyone, it goes back to your goals. That's a lot of the stuff that we talk about is going to be dependent on your goals, and if it's applicable to you, it's going to be dependent on what your goals are. But the reason people do invest is so that their money can work for them. We talked about last week. There's no labor laws on money. Money can work tirelessly for you, so you should allow it to. Money can do anything you want it to do. So let it work for you instead of you working for your money. That's why people invest. And investing allows you to have multiple streams of income. All millionaires, there isn't unless, I mean, pro athletes or, lottery winners, but I mean, those people aren't really, they're not wealthy unless they're investing. They're rich. So they have that one stream of income, but they're working for it. They're like a pro athlete, pro NBA player, football player. They have a job. They're getting paid a lot for it, but that's still a job. They stop that job, they stop that income. So with investing, you kind of always have an income, no matter what is going to happen. You always have an income, and you can have multiple streams of income now. So all wealthy people have multiple streams of income.
Yep, and that ties into what I was thinking about. So you said all wealthy people have multiple streams of income, and that's exactly it. Most, if not all, millionaires, people who are extremely wealthy, like I'm not talking about pro athletes. Those, I would consider those more rich people than wealthy people, because wealthy people actually had a financial knowledge along with their money in order to know how to keep their money going for generations to come. Yeah. So wealthy people, this is what they all do. You're talking about why should you invest? This is what wealthy people are doing. If you know the formula to how to make a lot of money and keep a lot of money, that's what you should go ahead and follow the model. It's like, don't try to reinvent the wheel. Just go ahead and do what other people have shown to have proven success in. So if wealthy people are doing it, it obviously works. So figure out what they're doing and apply it to your own life. And most people always have this stigma that, if somebody's wealthy, then they were just born that way. That's not the case for everybody. Just look at us. We were born just middle class dudes. We just raised up in normal single family households, and we already allocate our money differently than most people are doing. We're on our way to building generational wealth because of how we think, and just by understanding that what wealthy people are doing is investing their money to make a lot of money. That's what we want to apply to our own lives. So it's basically, like I said before, when you know better, you do better. I do want to tie in a little bit more about like our personal backgrounds, like as far as investing goes, because this is actually what we've been doing for the past year and a half. So for myself, for instance, once I built my foundation of financial knowledge, I started saving I started saving about 60% of my income when I was working my full-time job back in Maryland. I was saving every paycheck I got instantly. I put towards savings, and I had a plan in mind, like we talked about before. I had a plan for my money, like where was it going to go once I put it into savings. I had a plan for it, so that way I would be more encouraged to save, because I was like, I have a vision, like, okay, once I finish up here, I plan on going to grad school. That's why I'm here. I'm here at Purdue right now in grad school. When I got here, I didn't want to rent an apartment anymore because I knew that would just be throwing money away. Instead, I wanted to buy a house. I wanted to buy a house not only just to have as a first quote unquote investment. I wanted to have it as a true investment, where most people don't think.
You wanted an asset.
Exactly. That's
not a liability.
So I'm just going to stem away a little bit. Most people think that the house is their greatest asset, but by a dictionary definition of asset, that's saying anything that makes you money. Now, if your house isn't doing what mine is doing in particular, since I'm actually renting out each bedroom in my house, and that's generating income for me to pay for all my housing expense, that's what an asset looks like. A liability is what most people's homes are, where they just live in it and they have to pay a monthly mortgage on it. That's what that's the point. That's not what we're doing here. We're actually having a true asset, and now I'm able to live rent free by renting out all the rooms.
Yeah, and that Marlon was talking about just saying, people thinking of houses as investments. I mean, that's all fine and dandy if you really The people that think of houses as investments are poor and middle class people, and that's what it comes down to. Wealthy people don't think of a house that they live in as an investment. They see the house that they live in as liabilities. They have their assets pay for the house that they live in. So for me personally, I was kind of doing the same thing last year. So I graduated school, I was paying $1,200 in rent immediately.
Living luxurious.
Man, as soon as I graduated, I was like, shit, I'm finna get this nice apartment, go live over here, be living nice. I was like, man,
my granite countertops, marble floors. Need it all.
Hey, the crib was nice, bro. I ain't even gonna lie, but it was at the end of the day, it's like, man, what am I doing? I'm throwing away $1,200 every month for what?
Never see it again. Have you seen the $1,200 you gave away?
I lost all that money. What? $14,000 for those 12 months that I was there. So it's. I mean, it is what it is. But for me, I know probably like it was a month into living there. I knew, okay, I wasn't gonna say it's a mistake, but it was like, okay, this is probably I'm not gonna do this anymore. Like, so I knew. I mean, kind of, yeah. I wouldn't say that because it was. I'm not gonna lie. I wouldn't go back and change it just because I think I learned a lot of lessons like from like living there and paying that rent for that period of time. I wouldn't say I'll go back and change it. But I would say at that point I realized, okay, I want to get into my first investment, my first asset. So then I started saving my money for the same situation that Marlon was talking about. I said, for me, the difference between me and him though is, I mean, he got a house, a single family house, and he just rented out rooms to roommates. Me, I was tired of having roommates. I'm never having roommates again. I ain't going back to that. So I got a duplex, and I rented out one side of it, and I live in the other side of it, essentially. So that's kind of what I'm doing now, as far as that. And we've also done, what is it now? 3 investments together.
Yeah, I think so. Honestly, it's crazy how fast the time goes by. Like, we just started this last year, and we're already up. I don't know, was that 4 or 5 deals we've done already?
Yeah. So
we're doing.
So now we got the one here in San Antonio, we got the one in Houston. So we hopefully gonna get, I would say 5 more this year, hopefully. But a lot of people, because I kind of like post about this stuff, and I, put it out there because I'm trying to like kind of build that brand out there about what I'm doing and what I'm involved in, so that I can get more involved into it. Because when people see you doing it, that's putting yourself out there is how you kind of create your own luck in that space. So I'm just trying to put myself out there like that. But when I do, a lot of people reach out to me, and there's actually a lot of people interested in investing. And I mean, that's where the idea for this podcast came about. There's a lot of people that want to know how to do this stuff. And a lot of people, they come up to me or they hit me up and they ask me how do they start investing, specifically in real estate. But in general, a lot of people ask me like, how do they start investing? And for me, I think whenever someone asks me that, I say, okay, you gotta ask the right questions. Instead of asking where or how can you start investing, you need to start asking, how can I start investing in myself? That's the first thing you got to do. So investing in yourself is key to any sort of investment. No matter what type of investing you want to do, you got to invest in yourself first. How that looks, I mean, number one is time. You got to put the time in. You got to put the time in to learn. You got to put the time in to gain that knowledge on what it is you want to invest. Because it's one thing for me to sit here and say, yeah, this is how I did it. I did this. I read this book. I did this with this. I met this agent. I met this broker. I met this investor. But it's not going to look like that for you. It's going to look different for everyone else. So you have to do the research to find out what it is you're interested in, what it is you're interested in investing in. Because number one, if you're not interested in it, you're not going to take care of it. You're not going to take care of it. Who's going to take care of something that they lose interest in? So but I mean, from that, the education, whatever you choose, the education is the most important thing. Hands down, it's the most important thing. You're going to see a lot more return on time that you put in on education than the money you put into any investment. So education is anything can happen to you, or anything can happen out there, like with an investment. The stock market can go up or down. The real estate market can crash. But if you invest in yourself and your education, no one can ever take that away from you. No one's going to be able to take your talent from you. No one's going to be able to take your knowledge from you. You're going to always have that. And you can always build on that. So that's the number one asset, right? And it's also because, a lot of people, they say, they whenever they come up to me and they ask me, can they start investing? They just kind of want to say, okay, hey, can I invest with you? That's the first thing they ask. But like, that's not practical. Number one, because no investor wants to invest with someone that doesn't know what they're doing. No one wants anyone riding their coattails. And I'm not trying to bash anyone that's just trying to ask, hey, can I invest with you? But you gotta make an effort to do your own self-education. Self-education is the most important thing. We put in probably what?
Oh Lord, bro.
How much reading do we do?
I think I read at least 15 books last year and probably listened to over 200 or 300 episodes of podcasts, just trying to build all my financial knowledge. Yeah. It takes a lot of a foundation in order to get to this point. Yeah. That's what we're trying to instill. That's what people need to understand if they want to start getting into investing, is that education is very important.
Yep. It's that's the key. Like, everything you gain from investing, you're going to gain because you learned it. You learned it somewhere. No matter how it is, you learn it. And education doesn't just mean reading or podcasts. Education means however you consume information, whether that's like mentoring, learning from someone directly. It can be books and podcasts. To me, that's the best way to me, at least in the beginning, because you kind of can control your pace of learning at that point. So another thing with like investing in yourself is investing in your intangibles. So your communication skills is number one. Like that is essential in any type of investing you want to do. You got to be able to communicate with people. Investing is a relationship-based business, investing in general. So you have to be able to communicate with people. So, because I know for me, I think communication is unequivocally the key to getting whatever you want in life. If you can communicate effectively with someone, you can get whatever you want in life, hands down. And I mean, that I've read a lot about that, and I firmly believe that. But investing in people or investing in your communication is going to tie directly into being able to garner new relationships that are going to help you in the future, right? So the right relationships are going to prove to be more lucrative than any asset will be, because those relationships are going to become a pipeline for investments. You're going to get a lot of people bringing you investments, a lot of people just telling you about stuff. A lot of people are going to be coming to you first whenever they know you're involved in this stuff. So relationships are key. So education, intangible skills, relationships, those are things that you should always be working on first before you try to get into any type of investment. And another way you can learn to invest is just from following and learning from someone that's already doing it. Whoever that could be. It could be me, it could be Marlon, it could be anyone you know that's already doing it. But you learn from them and you add value to them. So you offer them things that are going to incentivize them to try to kind of help you learn how you could do it. And this is if you are serious about it. If you're serious about investing, this is something that you should consider. I'm not going to say this should be your first step. I think reading a podcast and that kind of stuff should be your first step. But if you're serious about it, this is something you should definitely consider. Find someone that's doing it and learn from them, and try to find a way that you can add value to them so that they'll be happier to help you, I guess you could say. So,
right. Yes. People enjoy when they actually see somebody wanting to learn more, but already have tried to do some stuff on their own beforehand. That's like when I went to my first meetup last year. I already had a little bit of foundational knowledge, so I could actually speak the lingo when I walked in, as opposed to being like, "Hey, yeah, I want to just learn. I want to learn all I can." I've heard so many people say that exact thing when they go to meetups. Yeah, man, I heard about real estate. This sounds like a pretty cool thing. I just here to learn. It's good to be interested, but at the same time, you're not showing nobody that you are going to stay with this, because a lot of people in this business will start for 2 seconds and then be like, "Oh yes, I don't understand anything, so I'm about to just drop back out." And that's that's why people are reluctant to help you out, because they know there's so many people like that. And if they helped out if they helped out everybody who said, "Oh yeah, I'm interested," they will spend all of their days, like like every hour, just helping out somebody new, and they'll probably still end up not wanting to do anything, like pursue anything. So that's why building that foundational education is important, to show somebody that you're serious. Because if you're serious, and they'll be more willing to help you out to like with the next step and what you should do next. And like I said, like we were saying with education, that's always very key, because think about anything else that you've learned in life, whether it's like algebra, whether it's history, like any class you take in school, or when you're learning in your profession, you always had somebody or something teaching you. Like, you need to have a foundation of knowledge in order to excel at anything.
There are only two ways to make money in the world. Either you work for money or you invest money and it works for you. Money is one of the biggest inhibitors in life. It's a part of everyone's daily lives and controls a majority of the decisions that we make every day. If you can make all your decisions independently of the financial factor that came along with them, wouldn't you? This is what investing allows for. Investing is very simple when you break it down. You send money out and it comes back with the original plus more. When your money works for you, you can focus on enjoying the finer things in life. Many of the wealthiest people in the world are investors that didn't start out wealthy. This is the tried and true formula to building wealth that will last you generations. It's like the wheel. There's a reason its design hasn't been changed in thousands of years. It's because it works. Now, before ever investing in an asset, you must first invest in yourself. Foundational education is the most important step when beginning to invest. When you have knowledge in a subject, it'll be a lot easier to succeed. Common sense, right? Everyone learns differently, but no matter what, you have to put in the time. Whether that's through books, podcasts, or mentors, however you prefer to learn doesn't matter, as long as you are learning and continuing to learn. An investor's education never stops.
One of the things about getting started is knowing your why, because your why is going to tie into everything you do in investing. So that's probably the first thing you should be doing. Okay, why do you want to invest? Why? Exactly. Sitting, like literally writing down why do you want to invest and thinking about that first before you do anything. Do you want to invest so that you can be financially free in 5 years? Do you want to invest so you can be financially free in 20 years? Do you want to invest so that you can just have extra income coming in? You have to have that reason, though. You have to have that why. And that's going to kind of give you an investment strategy. So investment strategies are going to be that's pretty much your outline as to how you're going to be investing, right? So everyone has a certain methodology to the way they invest. For me personally, my outline says I need to garner long-term investments that are going to give me cash flow so that I can one day be financially free. That's kind of the basis of my outline. That's the foundation of my outline. But when I say investment strategies, that's pretty much just like a defined approach that shapes the choices that you're going to make as an investor for your portfolio. So like I said, it's based off your goals and your why. So you can either be an active investor or you can be a passive investor. Active investors are typically investors that are more involved in the game. These are more people that are doing this probably as a job. But that involves a lot of management, and that involves a lot of your time. So there's nothing wrong with that path. But that is a path. The other one is passive investing. So passive investing is more for people that are doing this for future gain. So you're investing in it now for future gain, and you're kind of just on the sideline. You're doing it passively. You're putting money in. You're kind of just doing it on the side of your job, your day job. But you're in it for the long haul. It's for a marathon. It's not a sprint. Mm-hmm. And within that, this is going to be a little more technical, but there's certain types of investing. So you have the first type is value investing. In stocks, it's essentially like whenever there's going to be companies that are undervalued, and there's ways that they can increase in value. If you can see that potential increase in value, you would invest at this time when it's undervalued, and then when it appreciates or rises in value, then you're going to be sitting pretty. And it's the same thing in real estate too. You buy a house that's kind of dilapidated, and it appreciates due to, whatever you do to it, or just through appreciation in the market. And now you've added value. Now it's worth this. So that's in value investing. Another type is growth investing. So this is more, a lot of people will say speculative investing. So this is something in real estate, they call it speculation, because essentially is what you're doing is you're buying something now, regardless of the value of it, and you're waiting until it appreciates. You're hoping that it does appreciate. That's what you're kind of keying in on. That's your goal.
That's
you're
why they call it speculation.
Yeah, you're speculating. That's what you're waiting for. You're hoping, okay, no matter what price I buy it at now, it's gonna be worth a lot more in the future. You don't know, but you're kind of just gunning in on that. And that's why I think that's kind of why investing gets that stigma of that it's a risk because of that kind of stuff. But I personally don't invest like that. So I don't know. If you do that, then props to you. I couldn't do that. And the third one is income investing. So income investing is kind of a combination of the two, though. So with income investing, you are putting in money now and you want a return on it essentially now. So you want to get a gain on it now. So, I mean, in real estate, that's essentially investing for you're doing flips or you're doing rental properties to give you cash flow. It's any asset that's going to give you income now as soon as you own it, I guess. So that's kind of what income, those are the three types of investment strategies that a lot of people kind of play on. And within those, or within investing in itself, there are investment vehicles. And I'm not going to go into too much detail on them because, look, we don't invest in everything. Obviously, we only invest in real estate right now. We're not going to sit here and try to teach you something that we don't actively do ourselves. I will tell you in detail about what we're doing ourselves. I'm just going to mention some of the ones that are out there for you, and then you can kind of, do your own research on those specific ones. But we'll get into, more of the real estate and that kind of stuff. So the number one, when most people hear investing, the number one thing they probably think of is stocks. That's the biggest one that everyone thinks of. So, I mean, I would be doing the show injustice if I didn't talk about stocks right here, at least for a little bit. Well, I'm not going to, like I said, I'm not going to get into too much detail, but I'm going to just kind of tell you a little bit about it. So the thing about stocks are essentially, the definition of a stock is a share of a company. It's a part of a company. You own a piece of a company, right? So when companies go public, they are allowing investors to buy shares of the company. So that's what you see whenever you see companies like on the new NYSE, on the New York Stock Exchange, all those companies on that board and stuff. So when you invest in stocks, you're essentially investing you're trying to get a chance in at a company's success. And this is through dividends that stocks are going to pay. You buy a stock and those stocks are going to pay you dividends at regular intervals. It could be quarterly. That's usually quarterly, but they're going to pay you dividends based off how much stock you own in the company. So I read a book called Shoe Dog recently by Phil Knight. Phil Knight is the creator of Nike. And in that book, he was essentially talking about how he created Nike. And one of the things that was essential in that book that he talked about was they needed money. They needed money for a lot of their products that they were trying to buy, a lot of the shipments that they needed, and to pay for a lot of the stuff. They were going broke because they just were running out of money in the beginning of Nike. So what he did was they essentially ended up going public. So when a company goes public, they're pretty much saying, hey, everyone who's interested in a share of this company. So they have investors that are able to come and buy essentially a share of the company. So the company will take the money and now they have funds, but in exchange for that funds, they lost a piece of ownership of the company. And so now those investors can either sell their share or they can continue to just collect the dividends off of them. So this is like a win-win for, companies and also for the shareholders. So the shareholders get some money and the companies get some money too off of for the funds that they shareholders use to buy the stocks. So when people invest in stocks, though, they're essentially just investing in the company. They're not really investing in the asset. Whenever those shareholders were investing in Nike, they weren't investing into an asset. They saw the possible success with the company and Nike. And now those people are sitting real pretty. Because that's a $35 billion company annually. So yeah, that's essentially what stocks are. I don't want to go into too much detail, but that's essentially what they are. Bonds, on the other hand, that's another form of investing. So bonds are essentially just loans. So an investor is going to loan money to a company in exchange for interest rate payments plus the principal at the end of the loan. So if I was going to loan some money to Marlon, for example, I'm essentially becoming a lender, and he's going to pay. I'm going to give him the money. He's going to pay me interest every month. So he's going to pay me whatever interest rate we agree on, and that's essentially what a bond is. Another form of investing is CDs. So CDs are certificates of deposits. So with these are sort of like higher interest rate bank accounts that banks offer. So banks, they'll essentially give you a higher interest rate for keeping your money in there for a longer period of time in their accounts. So we were talking about last week, how they want you to keep your money in there, but they can't really control if you do or not. But to incentivize you to keep it in there longer, they'll say, okay, we'll give you a higher percentage, but you have to keep it in there for this amount of time. So they'll say 6 months, 18 months, a year and a half, so that they know for sure you can't just come take your money out next week. And they know, okay, we had his money to lend out. We're going to still give him, I don't know how many, I couldn't tell you what the average interest rate on a CD is, but they know, like, now they're for sure that they can
loan out your money.
Yeah, loan out your money without you taking it at all. That's exactly. Kind of going back to what we're talking about last week. And this is one of like the lowest risks, or the lowest risk investments. Very low risk here.
Remember the one thing: low risk, low reward. So
exactly. yeah. Facts.
But it is more safe. So people, like I said before, people do enjoy that word, safe and secure. So if you just feel like you want to have a little bit of return on your money, it may not be on the pace with the rate of inflation, but at least you are getting a return. So you can look at it just depending on what your financial situation is, what you want to have in life.
Yeah. And one last thing to mention about CDs is a lot of them offer compounding interest rates. So compounding is another thing you probably heard in school. It's another thing if you paid attention now, but you probably did hear it in economics or something. Compounding is essentially whenever you are earning interest on your money, including the interest you already earned. So there's a great example that actually demonstrates this. So if someone asked you if you would rather have $1 million or a penny doubled every day, what would you say? A lot of people would probably also say $1 million. And think of it. If you have a penny doubled every day at the end of 30 days, so one day you have a penny, second day you have 2 pennies, and then third day you have 4, and then the fourth day you have 8, and then at the end of 30 days, if you do the math, you're gonna have $5.36 million. So it's crazy to think about it from that perspective, but that's essentially what compounding means. So
that basically, since you're doubling your money, so what he was saying, if you have 1 penny, now you double that. Every time you always double it. So it's not saying that I'm gonna give you 1 penny every day. I'm gonna give you double what you currently have. That's what compounding is. Yeah. And if you want to visualize that, if you put the same little calculation he did into a spreadsheet, you will see it make like a hockey stick looking shape, and that's called exponential growth. So that's exactly what investing is. People always get discouraged because at the very beginning, they start off moving real slow. They feel like they're not going anywhere. But if you continue to keep on going, like we're doing, we had a failure. If we just stopped there, we would have stopped when we were really low. At a low point, we wouldn't have saw any gain. But since we're gonna keep on going, and we're gonna just keep on going for the long haul, like keep on investing, keep on learning more. Eventually, we're gonna hit that point where we start curling up and start going to the end of the hockey stick, where we start having that exponential growth. And so that's why it's really key to always keep on going, regardless of your setbacks and failures.
Yeah, and he hit it right spot on. Another thing another way that you can invest is just investing in businesses. You're starting your own business. That's a form of investing. That only if you're not involved in the business, though. Investing pretty much is not investing once you're involved in the actual business or whatever, in the asset itself. At that point, you got a job. You're not investing. So yeah, all these are essentially just passive forms of investing. These aren't really anything that's active. So I talked about earlier, active versus passive, with the exception of, starting a business and that kind of stuff. So now let's talk about what we do. Let's talk about our bread and butter. Let's talk about our peanut butter and jelly. This is what we do, real estate. So This is to us the holy grail. But why do we invest in real estate? There's so many, like I just said, there's so many ways to invest. We just went through most of them. But why do we invest in real estate? The main reason that we invest in real estate is because of the control that you can get from it. So in real estate, you control the asset. You are the one that controls what's going to happen to all of your assets, to all your properties. You're the one that's going to say, I'm going to sell this one or I'm going to rent this one. That's like the biggest advantage to real estate as opposed to other investment vehicles. Because the thing about other investment vehicles, a lot of the ones that I listed are based off of a lot of factors that you can't control. So with stocks, primarily stocks, really. I mean, when you're talking about investing in another company, a whole other company that has nothing to do with you, you're essentially just a number. And you're hoping that they're going to do good to make sure you get your return. You have no control over that. Donald Trump could go and say anything he wanted, and boom, there you go. You just lost hella bread. You just lost a lot of money just because something that was completely out of your control.
One thing I just thought about, like if somebody was invested in the Nike stock when Zion Williamson's shoe had ripped, I bet Nike stock went down. But that's nothing that you had control over. But since you were but you had your money invested in them, soon as something happens that you don't control, you start losing money. So that's why we like real estate a whole lot more, because we control the investment from beginning to end.
Yeah, in real estate you can control how involved you are in it. So you can mitigate a lot of your risk with real estate. With a lot of the stuff, you're in it or you're out. But with real estate, you control a lot of the outcome just because you can do a lot of due diligence on the whole thing. So due diligence, when I say due diligence, that's essentially just how well you're vetting the deal. So you're doing your own research to support that everything you're seeing for the investment is accurate, that it's something that is actually going to hold up, as opposed to, with stocks, you can do as much due diligence as you want, but at the end of the day, you don't have any say so in the decisions that are going to be made at those companies. But in real estate,
I don't control if Zion's shoe tears, like something simple like that.
Exactly. But like now in real estate, you are essentially investing in your own company. So you're the company and you can control the decisions that are going to happen within the company. So another reason that we really like real estate and like to invest in real estate is because of something called leverage. So leverage is something it's a term that's popular in the whole world of finance and, investing in business, because it's used everywhere. But within real estate, leverage is essentially just the use of something to maximize its advantage. So in real estate, it's the only investment vehicle that really allows you to own less than 100% of the asset, but you can still reap 100% of the benefits. So, for example, if I have a house that's worth that I bought for $100,000, and I own 20% of it, so I have 20% of equity in it. That's how much I own into it. That means there's a mortgage on there for $80,000. So that's how much I owe on it. So I only own 20% of the property, or 20% of that value. So I only own 20% of the asset, but I can still reap 100% of the benefits, because if I was to rent out that house and I collect that rental income, now I can get 100% of that rental income. Now I can choose what I do with that rental income. I don't have to give it to any business. I don't have to give it to the county. I don't have to give it to the government. I can do whatever I want with it. It's mine. There's no regulations on it. So you don't even have to pay the mortgage on the house if you don't want to. That's very stupid, but that's the thing. You have complete control. So whatever you're getting on that rent, you can do whatever you want with that money. And you pay, essentially what you're supposed to do is pay the mortgage, and you collect the remainder of it, which is essentially just cash flow. That's what cash flow is.
Cash flow.
But leverage is beautiful when used correctly. You can maximize so much of your money. Your money is going to go so far whenever you use leverage correctly, and it's amazing what it can do whenever you do know how to correctly use it and manage it, because it's also very dangerous if you're not used correctly. Indeed. So but Marlon, what are some of the reasons that you think real estate is a good investment?
Yeah, I want to hit on what you said at the very end because you were talking about how leverage is so good. It can really be maximized in the real estate. That's why we brought it up in the first place. Like that's definitely one of the best things about real estate, that you can utilize leverage to your advantage and really you let your money work for you very well and like maximize that as well. But one thing I was thinking about when you're talking, everyone needs a place to stay. People are always having kids, and everybody is, once those kids grow up, they need somewhere to stay. Like we did, we needed a new house. Mm-hmm. So if you're in real estate, you should always be in business, because unless people stop having kids, you should always have somebody that you can basically fix up a house for and then provide them a place to live in.
And I think we were talking about earlier, we're talking about kind of investing in, in with stocks is you're investing in companies more than you're investing in assets. So think of like when people like Warren Buffett, he says stuff like only invest in what you know. So for him, he's only going to invest in things that are going to be well-performing assets. He's not going to invest in something that he thinks is not going to be a well-performing asset. So for example, if he's going to invest in a company like Trident is a gum company, right? Or Orbit or something like that. That's a gum company. People are always going to want gum. And it goes back to what Marlon was talking about people always going to need a place to stay. It's the same thing. People are always going to want gum. Gum is something that it can't be changed. The way that people consume gum is not going to really change too much. It's not like one of those things that's going to be fluctuating a lot. It's not like a hot new fad. It's going to be something that's going to be stable, right? And that kind of is going back to what he was talking about when he was talking about real estate. Real estate is something that's very stable, but you can also look at it from that perspective too. I mean, that's if you want to invest in stocks or something. If you're going to do that, then you should be investing in something that you know is going to be stable. And another thing within that is, within investing in what you know, is really only investing in what you understand. So a lot of people will come up to me and say, how do I invest in real estate? Well, I'm going to tell you that you got to first understand how real estate works before you should try to invest in it. So, I mean, listen to what Warren Buffett said about this, actually.
We try to stay with things we understand. I mean, there can be all kinds of wonderful investment opportunities out there that I don't understand. I don't know what cocoa beans are going to do next year. Maybe you know, but I don't know. I don't know what crude oil is going to sell for. But I don't have to know. I just have to know the things. I have to know what I know. I have to know where the limits of my understanding are, what I call what my circle of competence is. And if I'm only able to evaluate 5% of the businesses in the world, no problem. I just stay within that 5% and try and find something. And most people get in trouble in investments because they get itchy. They can't discipline themselves, and they hear about other people making money.
So, I mean, that's Warren Buffett. He's a professional investor. And this dude is saying he's not going to go try to invest in, crazy stuff that he doesn't understand. You don't have to know about every business. You don't have to know about everything there is to know about everything.
And last thing, I know we talked about speculation earlier today, but over time, the values of homes always tend to go up. So just take Cali, for instance, California. The prices out there have skyrocketed since like maybe 20, 30 years ago. Yeah. It's always on a constant increase. And that's really the same in any market. Even if you have downturns, the property values always tend to go up. If you look at like over the course of the last 100 years, every property that you see probably in wherever you live in at has gone up in values over the past X amount of years. And I think that's one of the biggest advantages of real estate, is that it's always appreciating.
Yeah, and that reminds me of this movie. It's called Founders, but it was pretty much about the founding of McDonald's and how McDonald's was created. And the guy that founded McDonald's, his name is Ray Kroc. He founded it along with the McDonald's brothers. And one of the things that he talked about in that movie, and one of the key things about, McDonald's itself and the whole business structure of McDonald's, is they're not really in the hamburger business as a lot of people think. McDonald's is in the real estate business. So if you look all over every corner, it's a McDonald's everywhere. You can't, it's hard. You're going to be hard pressed to go 5 minutes down the street and not see one McDonald's. in most areas at least.
Right.
So some of the most expensive corners in the world have a McDonald's on them.
If you do ultimately decide that you want to invest, it's important to know where to start. First, you should establish the reason why you want to invest and what your ultimate goals are. This will help you determine what type of investor you will be in your investment strategy. Once you've determined your why and laid out your goals, you can begin searching for your preferred investment vehicle. This is different for everyone because it's dependent on what you're most interested in. It shouldn't be based on what's hot. Your investment vehicle of choice should be something that you actually have interest in, otherwise you'll lose motivation and stop caring. Regardless of what you choose, the goal is to pursue investments that offer the best return possible, otherwise known as return on investment, or ROI. ROI is a measure of the profit relative to the cost. So if I spend $2,000 on a stock, then sell it for $3,000, my return is calculated as my profit, $1,000, divided by the cost, $2,000. So a 50% return, or ROI. Good luck finding a stock at 50% ROI, by the way. Investing in stocks is essentially investing in a company. You are now a part owner but don't have any say in the direction of the company. In essence, you buy a share of the company, then you either hold it and collect the dividends or sell it and make a capital gain on it if the timing is right. Stocks can be a high risk, high reward investment, but due to factors out of your control, it's difficult to be sure. CDs and bonds are very low risk, low reward investments that are good for people that don't like surprises. Real estate is my preferred investment vehicle. By investing in real estate, I am betting on myself and limiting the presence of external variables determining my return.
You don't need to know everything to get started. So with any business, they all have a potential for a great success. Like with any investment vehicle, I would say they all have potential for to yield you a return on your money. So the biggest thing, as opposed to like choosing one, is just choosing one and sticking to it. Yeah. Stick to it and just build your foundational knowledge, whatever investment vehicle that may be. And I recommend just doing one at a time, especially if you're just starting out with investing all together. Don't try to say, I want to do a little bit of stocks, a little bit of bonds, a little bit of real estate all at one time. You can't learn that much stuff. If you start, it's like learning 3 new languages at one time. I would say focus on one thing and start and basically make that your sole focus so that you can build a whole bunch of knowledge in that one area. People always say don't put all of your eggs into one basket, but I look at it from a different perspective because I heard a quote from Bruce Lee. He said, I don't fear the person who's practiced 10,000 kicks. I fear the person who's practiced one kick 10,000 times. Mm-hmm. It's like somebody perfecting their craft, perfecting one thing and knowing how to do one thing really well is better than just being a jack of all trades but master of none.
Yeah,
I would say that's why I'm saying it's okay to put eggs in one basket, because if you're excellent at that one thing, you will make that one thing work for you. Yeah. And so you have many investment routes, but just choose one and stick to it. Mm-hmm. And that can propel you to something, to your financial freedom or just wealth building, just because how well you know that one vehicle.
Yeah. And no matter what you choose, the thing about investing that is it's true for all investment strategies is, I mean, investing is sort of like, it's like driving. It's like driving in traffic. So whenever you're driving in traffic, a lot of people like try to hop between lanes, and usually you end up you don't end up really going too far whenever you do really try to do that when you're in heavy traffic. Rarely does it pay off to hop to the next lane, because as soon as you do, you see the lane that you left start to move in, and then you try to get back over, and then you be mad because now you in the slow lane.
Exactly.
So you got to think of investing in the same way. It's you choose one and you stick to that one and you ride through it, at least in the beginning. Even if it's like not going well in the beginning, you got to stick to one, because there's market cycles. There's a lot of things that's going to happen. It's a marathon. You got to be able to stick it through, because there's going to be ups and there's going to be downs. And when you hop in and out of between stuff, you're going to be catching, you could be catching all the downs just because you hop in and out. So exactly. You got to be able to ride the whole thing. And the bad stuff is going to offset the good stuff, and the good stuff is going to offset a lot of the bad stuff. So you just got to think of it like that. So now it's that time of the podcast. Now we kind of closing out the podcast. So we kind of wanted to do the Q&A that we do every week. If you got any questions that you want us to answer, just contact us on Twitter at the Monopolizers or on IG at Money Monopolizers, and we'll answer any questions you got. This week we got 2 questions. So we're gonna kind of go through these, and then
Okay, so I'll read the first question. This is something I get asked all the time. It's like, what is your view on owning a home free and clear? So free and clear means that you own the home completely. So if the home is worth $100,000, you've paid all the debt off, and now you own the asset basically, or you own the property. I'm not going to call it 100%
of it.
Right, you own 100% of the property. I'm not gonna call it an asset because it's not making you any money yet.
Yeah.
But we'll talk about that in a minute. So let's say if your home is worth $125,000, I see you can look at it this one of 2 ways. In the first scenario, you own it free and clear, like we just talked about, where you own it. That's the only thing you can really say. I own it. Congratulations. But it's not making you any money, so it's not really technically an asset. Most people have this positive connotation that, owning it free and clear, I don't have to pay a mortgage on it. That's good and all, but you're not getting a return on your money. So you have $125,000 just sitting it's like sitting in a bank really, because it's not doing anything for you. It's not making you any money. My personal suggestion would be to leverage that the money that you own in that property. So I would say, you can leverage probably all the way up to 80% of the property. That may be advisable. That might not be. So in that case, if I took out a refinance loan, meaning that I went to the bank and said, "Hey, I have this home worth $125,000, and I want to borrow 80% of it." If you take 80% of 125, that just means that you are borrowing $100,000. You don't have to pay that to anybody, but what you should do with that money is invest it, because now you can make a return on your money. So say if you put your money, that $100,000 into an investment that is going to yield 10%, you would make a return on investment over the year of $10,000. You would have made that $10,000 if you owned that home free and clear and it wasn't making you any money. But you can make that $10,000 of but that being 10% of that $100,000 that you borrow from the bank. You can make a return on your money if you invest it, versus just having to sit there saying, I feel secure that my money I see this home is owned free and clear. I just personally don't see the big benefit of owning a home free and clear unless you're going to rent it out and just have every bit of rent be your cash flow. Then maybe that's something, but I still think you can get a better return on your money otherwise though.
Yeah. And because that reminded me, I remember last year when we had gotten to our houses, in the beginning, we were using the rent to pay off the mortgages. And something Marlon had brought up was that he was going to start contributing extra to the mortgage every month. And I was like, bro, don't do that, bro.
That's just learning experience. Yeah.
Yeah. I mean, it's not a knock or nothing. I was just.
No question. I'm just saying, like, it's people having that stigma, like, me owning more of the home is preferable, but no, but you're losing your spending capital. Like you can use that towards other investments. And so instead of trying to pay down your principal, you should be putting that toward an investment. Yeah. What you about to say?
That's something that's actually reminds me of something, because by you spending that money that you're using towards paying down the principal on that house or the remainder of that mortgage, you're losing out on other potential investments that you could be getting. So that is essentially an opportunity cost of paying for that mortgage. So opportunity cost is pretty much, that refers to like the value that you forego in order to make a particular investment instead of another one. So you're losing value here because you decided to invest it here instead of money there. So you could potentially be losing out on $100,000 that you could have got through investing because you wanted to put it into a mortgage you're getting a very little return off that mortgage. Most people are probably getting nothing when they do that. You're just doing it just so you can say you own more of it and your payment will be less. And I mean, the return on that payment being less isn't enough to justify that. So that's definitely something that I am definitely against too. I would never even consider trying to pay down my house 100%, just because that goes back to leverage. That's what I was talking about earlier. It's so beautiful when you use it correctly. It can work masters for you. I can't wait till we get into that in these upcoming episodes when we start talking more about real estate and the power of leverage. So yeah, hopefully that answers her question. The next question that we had got was, someone had mentioned to me, hey, what if I don't want to do real estate? What do you advise? So just like last week, I mean, this is a more of a personal question. I mean, I can sit here and tell you, oh, do this, and this because of X, Y, Z. But at the end of the day, it's all going to be based off of what you're interested in. You don't follow what other people are doing if you're not interested in doing it.
Exactly.
Because I mentioned earlier, you're not going to take care of it if you're not interested in it. So that goes back to investing in yourself and putting in the time to finding out what it is you're interested in and the education to learning about that. So whenever you do learn about it and you're knowledgeable in it, you're going to, and you enjoy it, it's going to make it a lot easier to do it. So that's kind of how I look at that. That's just a very general view, I think, because that's really a question that you have to answer yourself. If you want to really invest, you have to think about what it is you're interested in.
Right. Just to comment on that, like you were saying, if you like something, you won't mind doing it. Really, it's like us doing this. We enjoy sharing this information, so we're more likely to keep on pushing out new content. If we weren't enjoying this, we would probably just end up stopping after a couple episodes, just because we're just like, if we're not enjoying what we're doing, people are most likely to stop if they're not enjoying it.
Yeah.
So that's with anything. So you got to find what works best for you. That's one of those it depends answers, because we can't really tell you what you enjoy doing.
Yeah, facts. So that's all we're gonna do today for the Q&A. Like I said, if you have any questions, hit us up on Twitter, hit us up on IG, hit us up our personal accounts, hit me in my messages, hit my DMs, whatever you gotta do. Ask me any questions, ask us any questions. We gonna definitely try to answer it. If we don't, we gonna find someone that can answer it for you.
Most definitely.
So that's it for this episode of the Money Monopolizers Podcast. New episodes will be releasing every Thursday and will be available on all platforms. Just search Money Monopolizers. Learn something today. If you did, we'd appreciate if you rated us and left us a review on Apple Podcasts or anywhere else you listen to podcasts. If you can also find out more info about us on Twitter at the Monopolizers, IG at Money Monopolizers, or you can hit us up on our social media pages at iComunio and at Deuce Walls. But until then, we out of here.
You've been listening to the Money Monopolizers Podcast, helping you take control of your financial destiny. To learn more about how you can be in control of your money, visit moneymonopolizers.com. We'll catch you next time when Alex and Marlon share more personal finance and wealth creation tips with you. Now it's time to take action.